The biggest blood plasma company in the world, CSL, reported its full financial year results today in line with market expectations. Here's what you need to know now. Net profit after tax grew almost 10% compared to the same time last year's result, rising to $2.1 billion, which was exactly in line with what the market was expecting. However, if you exclude the foreign exchange movements, its profit was above its guidance levels. Its profit was bolstered by growth, strong growth in its leading blood plasma immunoglobulin portfolio, with Privigen sales up 20% and Hizentra sales soaring 34%. Now, this was underpinned by growth in immunodeficiency sales. CSL saw haemophilia sales rise as well in Haegarda, up 12%, and Idevulon soaring 25%. At the same time, CSL also transitioned its own distribution model into China, which allows CSL to work directly with doctors to have greater control. Plus, on top of that, on the other side of its business, its vaccine business was turbocharged by seasonal flu sales rising 21%, which helped its Securus business, which is already a very profitable business line. Total group revenue, as a result, rose 7.2% to $9.2 billion, with CSL importantly saying COVID-19 has not materially impacted revenue to date. But CSL did note some elements are unpredictable. Group earnings, known as earnings before interest, tax, depreciation and amortisation, or EBITDA, was up 9% to $3.1 billion. CSL declared a total 2020 dividend of $2.02 per share. That's 9% up from the same time last year, and that of course factors in the final dividend of $1.07 per share. So what's next? Well, for this financial year, CSL expects net profit after tax to be $2.1 to $2.3 billion. This means there could either be zero profit growth for this financial year or a rise of up to 9% on FY20. What's key here is two things. This forecast was 5% below what the market was expecting, and two, the reason for the variation is that CSL says there's a lot of unpredictability in supply chains. In particular, plasma collections are really up in the air, with donations being limited due to COVID-19. On top of that, CSL's outlook is bright, factoring in its research and development efforts to combat COVID-19. Specifically, it has a partnership with the University of Queensland to develop a vaccine and 4 therapeutic candidates in investigation and development phase. We also know CSL is already in talks with AstraZeneca to develop a vaccine in Melbourne, so keep your eyes peeled for CSL. The Aussie government has also secured a deal to produce a COVID vaccine with AstraZeneca, that's provided that the trials developed by Oxford Uni are successful. After today's announcement, CSL's shares popped 6% higher to a 4-month high of $311.67. So now it's about 9% off its all-time high of $342.75. CSL is importantly backed by 3 of the biggest brokers, UBS, Goldman Sachs and Citi, with price targets ranging from $320 to $334.